All right, logging into the dashboard. Today's topic is going to cover the P&L calculator. So I got a couple, three names that I've jotted down that could be a little bit of fun. First of all, happy Halloween. So we'll focus on some names that have to do with Halloween. So appropriate, right? I just logged into my dashboard, kind of right before hitting go here. We can see the little pumpkins down there. Go to our chat. Hello. Yes, perfect. Great. So I'm going to get moving then, and then people can join us as they're able kind of throughout the session. So again, I just logged in. If you're brand new to us, this is what you'll see. You'll see a nice little friendly concierge. You'll see this join button for the Eyeball Live webinar. So if you clicked on that, it's going to bring you to the screen similar to how you registered for this current webinar. So we'll always update this with the topic. We typically do these webinars every Tuesday at noon Eastern. If it's a particularly busy week for that Tuesday, we'll typically do Thursdays, but Tuesday or Thursday, we tend to do these webinars where we drill down onto a specific topic, like today, which will be P&L calc, but I don't want to give it away yet. And then also a couple different ways to follow us in addition to these webinars and our emails. Here we are on our Twitter. We're at iVolatility. Here you can see we come in and we post about different trends. Typically when we see something happening with volatility, with the IVX for a certain name, like Fluent, Graceful, Troops. This has been some interesting names over the last day or so. So this is a really cool source for additional ideas from us is at iVolatility. Here is our Reddit. So our Reddit page, we tend to post kind of interesting things about editorial and different trends and charts that we're watching, as well as some videos. We're at r/iVolatility. And then here's our YouTube page. Our YouTube page, we recently updated. Here's the welcome video. And then if you click on the videos, you'll get everything kind of organized by topic. So you'll see the names. Some of them are shorts. Where we really just kind of do a quick hit on a certain topic, and then others are the longer demos, like what we'll do today. We're at iVolatility's YouTube on that channel. And then we recently revamped our Facebook, which is of our at volatility. You can see this combines kind of all of our socials, right? We have videos, we have text, we have different trade ideas. So it's another really cool spot. And then finally, our LinkedIn, where we also kind of post different ideas that we have. We're at iVolatility.com. You can find us there. So you can see we just posted about the IWM, which is the Russell 2000s. So that's an article all about the IWM and kind of what we've been seeing with that. So a lot of cool ideas and resources. I'm going to go ahead and minimize these and get back to the topic du jour, which is our P&L calc. So once you are here, this is going to kind of walk you through here. We showed how to run custom kind of volatility scans, stock sentiment, another very popular topic, right? Because sentiment does move markets. Scanner, another beefy topic where our system can analyze potential trade setups in real time, data download if you want to do some back testing, and then daily updates. Here, again, you can kind of toggle between the views as we're at support@iVolatility.com, whether that's iVol, what have you. So that I thought would be fun to kind of, always a great field to gather additional trading ideas. Here is where we put out a couple different things. This is like our editorial. So we'll write different articles and post them here. We tend to also email those out. This one was all about our social. So kind of what I just showed. This is kind of our revamped social where People are always asking how they can get some more ideas. That's a great way to do it. And then the one before that, we covered treasury bonds. Was basically saying, is this a guillotine that's going to keep going down, or is there light at the end of the tunnel for anybody that's bullish on TLT? Which is the 20-year bond fund. And then we come here. Welcome to Ivo Live. This is our IVX monitor. This is also really cool because it tracks like the 200 most active names in the market. And what it does is it shows where its current implied volatility is. It shows if that's higher or lower than the day before. And then it gives you the 1-year high-low range. So for an example, Google has a high of 45 on its implied volatility and a low of 21. So right now we're kind of in the middle of that range. So this tells you a lot with a little on some of the more popular names in the market. Very, very cool tool. So speaking of popular names in the market, again, I wanted to have some specific examples, today that we could go over, that I thought were kind of fun and Halloween related. And so those are Walmart, Home Depot, and Target. So I'm going to get rid of TLT, Cisco, and Apple. Because Walmart, Home Depot, Target, like with Home Depot or with Halloween rather, I read where there's going to be something like 3 billion plus in anticipated spending this Halloween season, which is it sounds like it's in a perpetual growth market. That number never seems to go down. And these stores, Walmart for candy and costumes, Home Depot because they have the Skelly, I think is what it's called, like that giant 15 skeleton that people pound down the door for, and candy and other accessories. They've been trading differently, and I'll show that in a moment. But what I also think we could do is I'll show you how to pull this up. If you never pulled these tabs up before, just in case you're brand new. Let's say you had logged in, you clicked on Ivo Live, and you have the default here, right, which is going to show you the stock monitor for the Dow. Here's our Dow here. Here's our preset scans, which I demonstrated how to do and use last week. And then here's our gear icon, where I demonstrated how to create kind of your own custom view. A couple different things you could do here. So we could play with this. We could say, okay, 10/31/23, Halloween trades. We go, can't have too many characters. So here's our new group. And then if we wanted to add to that group, let's say with those three stocks that I mentioned earlier, what we could do is Walmart here, Home Depot here, and then Target here. And now we have our new group. And then from this group, we can do all kinds of things. We could sort ascending, descending order. So who's up the most today would be Target. Who's down the most would be Walmart. Who's trading with the highest implied volatility? That would be Target. So Target's up the most today and trading with the highest implied volatility. Who has had the highest volatility in the past, right? Which is historical volatility, HV. That would be Target as well. So Target's just been a volatile name. Here's our overall options volume, which is kind of the sum of the call option volume, the put option volume. The other cool things you could see here is call to put ratio, right? Like, so our traders buying more calls, or they buying more puts? So really, really cool, interesting info kind of from this default view under our new trading tab. You can see this is now, instead of stock monitor DJX, this is stock monitor 10/31/23 Halloween. And so to pull up these names, a couple different ways you could do it. So you could click on it, and here we go. And then also what you could do, let me expand this out a little bit. There we go. Get us back in frame. Also, what you could do is you could click on that plus icon, right? And you could type in the ticker. It just depends on, whatever you prefer. While we're talking about preference, also, user preference on the theme, the color theme. So I like this one, this night mode. Looks cool to me. You just need a little orange in here. Oh, there we go. And then here's the day theme, which you're probably used to seeing. So let's look at, these names, some of the things that are interesting. Over here on the left, you'll get the fundamentals. So we could see that Walmart's down a bit today. That's implied volatility's gone down a bit. And then here's our options chain down here, which we'll deal with soon. Here's our chart. So my typical trade, lasts anywhere from 2 to 3 or 4 months. And so if I pull up my zoom bar out of the way, if I pull up this 3-month chart, what do I see here? So what's interesting is on this 3-month chart for Walmart, we have price in blue. Here we go. Here's price. We have implied volatility in green, right? So implied volatility and price are about to kiss, which is, kind of one of my favorite trade setups. With price, we had this head and shoulders pattern, and now we've kind of broken out to the upside here, retraced a bit down here in orange. I would circle this. Where's my pen? There it is. Nothing like a good triple circle. So I would triple this to show where price and implied volatility are meeting. You can see there's in inverse relationship. So here is some trade setups that I'd run through the P&L calculator. Is buying a call, right? Because if we buy a call, we'll benefit if Walmart breaks out to new kind of 3-month highs here. I would probably look at a straddle. And so we know for sure it's not going to stay here. We're confident in that. Let's say that's our thesis. So I look at it, also straddles and strangles, which we'll do today for Walmart, just kind of as a cursory overview. They're saying let's do apples to apples, 3 months. Look how different this is. So we have price here, which peaked. This is like a mountain peak, right? Because we had this rise. And let me demonstrate this, right? It's always good to show these Ivo Live tools at your fingertips. So let's go here. So we had this uptrend in Home Depot price coming up to July 31st. You can always look at time down here on the horizontal axis, and then price is over here on the y-axis. So we had this uptrend. Then we had this sideways market, right? So we kind of had the peak here, right? And then another one here. So we kind of went sideways for, what is that, about a month and a half. And then boom, the bottom has dropped out. And so here we go. Now, what's interesting here is the bottom's dropped out. We've had a couple of bear market rallies here. And then it's fallen lower, but maybe on the heels of selling a lot of skellies, this thing is showing signs of life. And if you notice, as it's showing signs of life on its price, its implied volatility is also turning lower here, this green line. So, and of course, historical volatility, which shows what's already happened, is ticking up because, this has already happened in the past, but during this downtrend when we saw that uptick in volatility. But the key things is looking ahead. Will the price continue higher, and will implied volatility continue lower? If so, what that means is the options premiums will get cheaper, and so it'll be cheaper to play Home Depot. Some of the trades that stand out to me here are maybe buying a put because, if this downtrend continues, and implied volatility to go bearish on Home Depot. Another thing that stands out to me could be maybe selling a call and then buying the put, right? So if we sell a call, when you sell a call, you're agreeing In this case, if we sold a naked call, we'd be agreeing to buy Home Depot if it rose to a certain price. But we could take some of that premium and buy our put, which is our bearish bet. So it's like a cheaper way to get in on a bearish bet. So those would be kind of two trades that we'll look at in a moment on Home Depot. And then on Target, let's see what Target's looking like. So Target, we looked at, it's showing the best strength in terms of upward movement on both the IVX and on the share price itself. So if we come over here to the 3-month chart, this is kind of similar to Home Depot. It's a lot more similar to Home Depot than it is to Walmart. But if we come here, we could see we had this up move in implied volatility. Let's make that easier to see a bit. So we had this big up move in volatility that's now kind of coming down. Meanwhile, for price, Target fell off a cliff here mid-May, and then it kind of bounced sideways, traction, and then it just kind of, has meandered lower. So what's interesting now, though, is if we look here, let's go ahead and make our mark. So if we look here, kind of this current price action, what could be interesting is playing kind of this support resistance. So we're kind of bouncing here, and we're bouncing between this 3-month support level. And when I say support, I mean like this lower level, and then up here is like resistance level. So we're kind of in this band. What are we at? Like 115 to like 105, so like kind of more or less $10 per share for Target. So this could be interesting because one of the things we could say is, well, we don't know if Target's going to go lower or higher, but what if it stays within this range? What if it stays range bound? And we could design a trade around that, which is really cool. It's not as common, but basically what we do is we'd sell a put agreeing to buy it if it dropped below this level, and we'd sell a call agreeing to buy it if it went above this level. And I'll show you how to analyze that on the P&L. So if we go back to Walmart, what we would need to do is choose the option to start evaluating for our particular trade. So, again, I like to go 2-3 months out. Let's say we wanted everything to close out before the end of the year, kind of for tax purposes. So if I go 2 to 3 months out, that'll bring me where? That'll bring me here, like December 15th. The at the money is 160. What that means is it's the closest strike price to the current price, 162.49. That's why it's considered at the money at 160. We can see the at the money puts are running about $3.50 a share, and every option contract trades in 100-share increments. So it costs $350. And then here's our calls, which are almost twice as expensive. And they're running about $6.60, about $660 per contract here. So this is our at the money. We don't have to do an at the money. We could do in the money, we could do out of the money, but this is kind of the expiration date that we'll play with because it's kind of right in my sweet spot. Speaking of expirations, I'm looking at all, right? So this is going to go all the way out to January 16th, 2026, which will somehow be here before we know it. Or I could only look at leaps, which will only show me these long dated options out here. That's what leaps stand for. Or I could look at the next two, right? If you're kind of more of a short-term trader and you want this to end, this expired in the next 2 months or so, you could click next two and so on and so forth. So this is kind of perfect because that's the one we were looking at anyway. Mid price. So if you like to trade or analyze out of the money or deeply in the money options, you could trade your mid price. Our mid price is always going to default to our current price. So you could change that if you so choose. Most of the time, people like to look around at and around the current strike, though. So I'll leave that as is. You can look at 5 strikes or you look at all. So, if you like to trade something different like SPX, which has a ton of expirations in a given day, you could look at all, and you could look all along the chain, and then call and put. So I like to look at calls and puts, but if you only like puts or only like calls, if we only wanted to go bullish, like our screen a little bit, but if we fluid and flexible, which I tend to do, I just leave calls and puts up. It's the view So the strategies we mentioned here for Walmart was potentially buying a call, which would be betting on the upside here, or a straddle, right? Or a strangle. So basically saying, look, we think this is going to go higher, or we think it's going to go higher or lower, but we just don't think it's going to stay right here. So then what we would do, which first of all, know, quick aside, what I also do before I go to the P&L calculator is I just like to come to the sentiment analyzer just out of habit and just quickly type in kind of what I'm looking at. In this case, Walmart, hit go. And then I like to just see, does it kind of like, go with my thesis or against? So right now, Walmart's or straddle or strangle, because basically the only way you lose money with straddle and strangle is that's how you lose webinar. But basically, quick little cursory view here. This confirms and goes along, at least with my working thesis. And then you click on P&L calc. So when you get to the P&L calc, when in doubt, we always have user guides for any of these tools. So never feel like you're lost. There's always a user guide. So here, you could see it's, well organized. It has a table of contents. You could do Control F for whatever it is that you need and find it in the document. But always know that there is a guide available if you need that help. Then you type in the ticker that you're looking for, in our case, Walmart. And we said December 15th. And we were at 160, was our at the money, right? So let's go to our call option, right? Puts on the right, calls on the left. And if we hit 670, like anytime you hit the lower of the two numbers, right? The bid, it's going to show up as a sell behind us here on the screen, if everybody can see that. So if you want to default to a buy, all you would do is hit the ask, right? And then that would show up as a buy behind us. So for right now, but even if you click on something by mistake, all you got to do is click on the button and it will reverse that action. And here we go. You could see kind of in table format, if Walmart's at these various stock prices on the left, how much profit we'd be making on the right based on buying this one call option with a 160 strike. We're only buying one of them. We're going to pay $6.85 a share, so 685 a contract. Here's the implied volatility of this trade, the delta, gamma, theta, and vega. So since we're buying this, we're going to be paying this theta, which is time decay. So here is our P&L in graphical format, right? So this is, clearly buying this call with, here's our share price down here on the horizontal axis. Anything over our current strike price. What's great about this P&L, though, is this blue line is our break even. And that's important because we're spending money to get into this position. So it's not just as simple as, hey, we need this thing to go to 161 to make money. We need it to go, past 160, and we need it to go above what we're paying, right? Which is, so 160 plus 685. So it's going to say, all right, here's your break even, and it's going to calculate it for you, which is great. So this is if we're buying this call option. The other thing you could do is you could play around with days to expiration. So what happens when we're 20 days out? What happens? No trades happen in a vacuum. Anybody that's been on these webinars before knows I always say that. So what happens if volatility goes up 15% between now and then? You're going to see this big bump in implied volatility and in theta, which you saw down here, because all else is still equal. And then you could say, well, what if instead of selling one or buying one contract, we bought 10, right? Here's our new P&L. So that'd be a nice little trade if it happened, but caveat emptor. And so other things you could do from this view is you could say, wow, I completely disagree with what I originally set up. I want to do the opposite of this. So instead of buying the call, I want to sell the call. So you can click here. In this case, what you would need to happen is you would need Walmart to go lower in price, right? So here is our price. We need it to go lower for us to make money. If Walmart goes higher, then we lose, clearly. You could also invert here. And now when you invert, this is the opposite. So we're back to buying this particular call option. And then what we could do is we could kind of design a straddle and a strangle here. So right now we're buying the call, so we're betting on the upside. Let's do a straddle. Where we come in here, let's add our additional option leg. Let's add our put. So we come here, come to the 160. Here we go. Put. So now we're buying this put. So check this out. Basically, in this particular case, we're buying the 160 call. So we'll benefit as soon as that chart updates for us. We'll benefit as long as we can go above 160 on the call, of course, plus our cost basis. And then as well on the put, December 15th, 160 put, we would be profitable as long as the stock went below the 160 put plus what we're spending on it, right? So let's go to a strangle now. So let's say we went to, and here's another way you can change the particular strike price. So the strangle, we're kind of strangling the current price, which is 162.50. So if we came here and we said, let's buy the 170, and then let's buy the 150 as an example. Here you can see where we're profitable, right? So basically, we need Walmart to not stay between these two strikes. We need them to go higher. They're kind of out of the money, so they're pretty cheap. But we would need this move to happen, obviously by December 15th. So we could tighten these up, and we could say, well, what if we just wanted to buy the 165 call, and then what if we wanted to buy the 155 put? This will tighten it up a bit. You're seeing we're paying a bit more for it, so we'd be spending the 385 plus 213, out of our pocket. But again, we have a tighter range here. So basically, we just need Walmart to not trade within this $10 a share at expiration. If we go higher, we go lower. This is where we make our money. So those are buying a call, doing a straddle and a strangle for Walmart. If we now move on to Home Depot, let's see. So Home Depot, this is where it shows your share price, 283.94. Remember, Home Depot was in the midst of a steep decline, but implied volatility was turning lower. Price was going a bit higher. But here, the momentum was clearly bearish. And so if we came at the 283.45 or 283.94, so if we came down in December here and we said, let's buy a put more or less at the money, 280. Let's see, so we're buying this put. So now we could see, again, if Home Depot continues lower, here's our profit, margin. Whereas if Home Depot can get it together and head higher, here's what we're looking at in terms of our loss, which makes sense because we're buying to open this put. Again, you could say, well, what if volatility changes 10 absolute percentage points? That just went from 27 to 37. But again, this is a bearish bet. Now that's costing us, $9.15. And so sometimes when I go short, one of the ways that I lessen that blow on what it's going to cost me, to buy, let's go ahead and reset, here's what I'll do. Add option leg. I will sell a call if I think there's not too much upside risk. Like, in other words, if I think the company will stay below a certain share price and remain bearish, what I'll do is I'll buy the put and then I will sell the call. So what happens here is we're still profitable as Home Depot goes lower, right here to the left. But we're going to earn this $3.95, right? So instead of this costing us $9.15 to get in, they'll cost us $9.15 minus $3.95. So essentially, it'll save us around $4 per share or $400 per contract, and it's still kind of the same thing. It's a bearish bet. The risk when you do sell a call is that, in theory, when a stock goes over your strike, you do have unlimited risk as it goes higher. In practice, of course, stocks don't go to infinity, but generally speaking, if I'm very bearish on a name, this is one of the strategies I like to use. And then I come here and I see really where my P&L is. So things get really nice if, Home Depot really continues taking a dive. So those were the strategies for Home Depot. Again, this is kind of a cheaper way to go short, right? Buy the put, and then sell a call to defray that cost. And then on Target, we decided also had a steep price drop. Its implied volatility was going higher, which was opposite of Home Depot. But it was we were wondering if it was going to stay range bound, bouncing between 3-month support and resistance. So our current share price is 110.78. So a couple different ways we could play this. We could say, well, look, what if this thing's not going to go higher? It's not, or it's just going to kind of bounce and stay where it's at. We could come to this 110. We could sell the put. This means we would be agreeing to buy Target if it dropped to 110 by December 15, 2023. In exchange, though, we'd earn $615 per contract for agreeing to buy Target. Remember, that was kind of like the 3-month support line was right around 105, 110. So it could be a very good entry point, right? And why not get paid? Because if we agree to buy it for 110 and we get paid 615, we're really agreeing to buy it for 103.85 per share, right? Because we're going to earn that premium. So this would be another cool potential trade. Obviously, if Target went lower, though, we'd be sitting on a paper loss. If it goes higher, that's where we're profitable on this particular trade. So another interesting thing we could do is we could say, well, that 3-month support was around 105 per share. And then the upper band was around 115, I believe. And so let's come here to the 115. There we go. Sell that call. And so, what's interesting here is that if we'll earn this premium, this 425, and then we'll earn the 405 as well, because we're selling to open the put and selling to open the call. So as long as we stay within this 105 to 115, we won't be put on the put and we won't be assigned on the call, right? So it creates this interesting way to play a range bound trade, which is also what I had here. Let me hit refresh with Home Depot. I had it pulled up here, but the point was it was the same thing where if Home Depot stayed range bound right in here, here's our blue line, there's our profitability, then expires as profit. Where you lose money, of course, is if it moves significantly one way or the other. But this is a cool way to kind of look at names that are a bit range bound, excuse me. And then, of course, for all of this, for spreads, if spreads are new to you, we have our real-time spread scanner. I'd recommend coming in here and giving our real-time spread scanner guide a skim. It is definitely worth it. This is one of my favorite tools because with this real-time spread scanner, you could see all these pretty little graphics. But what you're able to do is you're able to analyze that we played with straddles, just like a further out of the money way to play a strangle. So you just need a more significant move to make money on it, but it's cheaper to enter. You could also do a calendar spread, about bear vertical spread, bull vertical spread, bull diagonal, conversion, collared, naked call, naked put, and covered call, covered put. So the 4 covered puts in the underlying position. So it's a good kind of maybe insurance play. You could choose come here and you could just hit Walmart. We're looking at straddles with Walmart and hit search. And then it's to populate with interesting ideas for Walmart, right? And then you could sort them by profit, 2 standard deviations. So if the stock moved 2 standard deviations, what would the profit look like on this particular trade? It's a really, really cool tool. So we'll cover this in the next couple of weeks. But for now, that would be an easy way to look at things. And then 2, for the P&L, just to show that covered call, because I know that is popular. Target is probably the one, like if we sold the put and we got put, then we would own shares, right? So we would buy 100 shares of Target at whatever our strike price is. Let's say we owned it right now and shares are at 110.79. We could now sell a call against our shares. So we could still go out to that December 15th. And we could agree to sacrifice the upside and say, look, we don't care we don't think it's going to go above 115. So we're going to sell the right to that upside here, right? And then here we go. So we bought these 100 shares. We're selling this call against our shares. So we don't benefit in any upside over the 115. But if we do expire at 15 or higher, we've maximized the potential profit of this trade as well, because we get to keep all of this. And we also benefit from the upside from 110 and change to 115. And then our shares would be called away. What you see here. So that's another really good use of the tool. And then you can add as many kind of option legs as you want within reason, and then as many stock legs as you want too. So you could do different things like iron condors, butterflies, however you want to play with the P&L calc. Just find a couple names that you're interested in, like what we did today. We had a little bit of fun with names that could benefit from Halloween, or at least be in the discussion for Halloween. And played with 7 or 8 different trade scenarios for said names. So I'm going to pause for some water. Let's see. I saw the note on audio. Am I strong? I'll have our team do some editing here, to make sure that my voice was coming through nice and strong. Yeah, I think Gremlins might be playing with my audio today, because I did get a error message that the internet connection was a bit unstable. So I'll have them play with that and make sure in the recording that goes out to everybody, it's strong. Any other questions, P&L related, calculator related? Like I said, we'll do some real-time spread scanner next. Probably next go around here. Also, last thing, if you are not currently a user, type. Make sure it's loud and clear. What I used today was, I like to show this. I used this Pro real-time account, so everything was updating in real time. And this has the P&L calculator included. So it is advanced. It has the P&L calc, but it doesn't have the real-time spread scanner. So that's just something to keep in mind. And then the basic plan does not have the P&L calc. Again, that's what we covered today. So just kind of keep that in mind. And then for any questions, support at volatility.com for any needs you have, whether it's subscription based or P&L calc based. And again, I'll make sure on the next go around the audio is nice and strong. So with that, I wish everybody a very happy Halloween, and I'll let everybody get back to it. So thank you for joining, and this has been Jonathan with iVol Live. Happy trading.